24 hours to go for the budget, and today we discuss what are the key tax changes expected. The expected tax changes are going to run for you on your screen. I don't have the time to read them, but I'll straight away toss them to the two experts, Sudhir Kapadia, National Tax Leader at EY, and Himanshu Parekh, the Partner Tax at KPMG, to discuss what we should be prepared for in terms of our take-home pay and our savings, our earnings. Gentlemen, thank you very much for joining me today. Mr. Kapadia, first up, the big thing that all of us who are watching the channel are interested, whether we are stock investors or not, is on the personal income tax. Are you expecting the non-exemptions part is going, non-exemptions income tax is going to become...
Still working?
Oh, sorry. Is going to become very important in this budget that will be pushed?
Right. Good morning, Lata. So I think on the corporate tax front or business tax front, most of the reforms are already in place. If you think about it, with this last budget of this term of the government, it's a great opportunity for the government to reform the personal income tax regime. We have to admit it's today quite complicated with choices given under the old regime and the new regime, etc. Therefore, the expectation is that government will simply go with a concessional tax regime, which is in play, but with some tweaks to make it more attractive. Today, as we know, there have been very few takers. In that sense, what we have recommended is that, for example, the highest income limit should at least go up to 20 lakhs before you kick in a 30%. And if you look at it, that's adjusted for inflation. From the 15 lakh limit, which is currently there. Secondly, for health insurance and for education, you should continue to provide, and investments, as you rightly said, continue to provide some incentives for savers, because it's very important for the savings rate in India to sustain, if not increase, to fund the capex, which is everybody says is a sine qua non for a growing economy.
Okay.
And the third is that you don't want a complexity of the old regime, etc. You have to prune the deductions, and therefore we are saying that just focus on these three investments: health and education.
Okay. Your word on this, Himanshu, are you also expecting that they will make the non-exemptions direct income tax more attractive? And, what we were told was that they would keep standard deduction and allow that 80cc deductions on medical and home. That, I think, is what Mr. Kapadia is saying. You also expect that that may be the end result?
Yes, very much expect that, Lata, because, in terms of recent news reports, if you see, less than 5 lakh taxpayers have opted for this new regime in terms of paying personal taxes, without availing of those exemptions. So out of 7 crore odd tax returns which have been filed, only 5 lakh odd people have opted for the new regime. And therefore, there's clearly a need to revamp the new regime and make it far more attractive. And if that not be so, there's clearly a need to, increase the basic exemption limit of 2.5 lakhs, because that has been stagnant since financial year 14-15. It's been 8 years since which it has not been changed. Similarly, there's a need to increase the limit of section 80C, which remains at 1.5 lakhs against in the last 5 years or last 8 years or so. And again, a need to increase the deduction on interest on housing loan, which remains at rupees 2 lakhs since last several years.
Okay. Well, I just want to say two things in defense of the government. One, I don't think they can get the same kind of tax collections that they got last 2 years. Ultimately, the tax grows as much as the nominal GDP grows. So while this year, they have got like 18% net tax, revenue growth. The coming year, everyone's expecting only 10 or 11% like nominal GDP. So I don't know whether they can afford giveaways. And Mr. Kapadia, would you know how much the government will sacrifice if they increase, as you say, the housing loan limit or increase standard deduction?
Yeah, Lata, that's a very fair challenge. I think the government will have to grapple with. We don't know the exact number, but it would be fair to say that any giveaways, if you like, exceeding 10,000 crores, frankly, will be very difficult in terms of the balancing act. Let's not forget, and I think the government will make it a point to continue with the glide path to come down to a 4.5% fiscal deficit, which is recommended by the Finance Commission by FY26. As you rightly pointed out, we have the IMF figures, the economic survey will be out. Expectation is that the growth projection for next year for India, though better than the global growth projection, will be muted. And as you rightly said, it will impact tax buoyancy to an extent. However, the silver lining, Lata, as we know, is the inflation factor. That will help the government in a couple of ways. One is the tax buoyancy itself will be better because of inflation.
No, sir. On that, I'm on slightly different ground because I have done the poll with economists. That inflation helped this year. Next year, WPI is expected to be, 0 or 1, single digits for many months. And WPI goes into the calculation of nominal GDP for at least 60%. So I don't think we have the inflation crutch next year.
It won't be to the same extent that I agree with you, but I think what we have seen is GST collections particularly are helped by this factor.
Yes.
And it won't be the same. It won't be the same, that is for sure. And that's what I'm saying, that it will have to be a balance here. Anything more than 10,000 crores will be difficult for the government to give away.
Yeah.
So that is what I'm expecting at best.
That's a very valuable number you've put on the table. So let us not, run away with expectations of giveaways. Probably something to make, as both of you say, the non-exemption income tax regime a little more attractive. Okay, now
and if I can add, Lata, sorry, if I can just add, on the corporate tax, it is important that for some of the cobwebs like withholding taxes, for example, we have today 0 to 30% for some 30 items. What business is expecting is more, cleaning up of some of these issues in compliance rather than any further reliefs. To be fair, I have not seen any corporate or business representations talking about any further relief. So there, it's a low-hanging fruit is all I'm saying for the government.
Fair enough.
To attract more investments.
Fair enough. And that is one of their prime goals. I'll just come to the corporate in a minute. Let me just finish this personal income tax. The surcharges, Mr. Parekh, are you expecting? I mean, after all, the highest level at 42% has been hue and cry. But on a pre-election budget, you think one should expect that?
Well, one should, that's a fair expectation if you ask me, Lata, because, you look at the highest corporate tax rate today in India, that's 25%. For companies which are involved in manufacturing activities, the tax rate is only 15%. As compared to that, on the personal tax front, the highest tax rate, surmounts to more than 42%, which is extremely high by any standard. And I think that's a fair expectation that be rationalized and brought down to about 30% or so.
Okay, yeah, we are just running the surcharges table. So, yeah, it is very high for above 5 crore. Let me come to the big elephant in the room, which everybody who is watching the channel is interested in: short-term capital gains tax on equities. Mr. Kapadia, the market is only worried that it should not be equated with debt. Because if it becomes 3 years, no problem. But if it is taxed at your marginal tax bracket, hell can break loose. Should we be prepared for such a shock?
So Lata, let's just talk about the design of short-term capital gains tax as it prevails in most countries. Countries which have a philosophy of attracting more investments and therefore exempting capital gains, in some cases even dividends. They really don't care whether it's short-term or long-term. Now, those will be hotspots for investments, whether we like it or not. Other than those countries, it is not unusual for countries to tax short-term gains, including, by the way, in the US, at the applicable marginal tax rates. Now, that's the design point. That's the philosophy of short-term, because short-term is equated to normal business or marginal rate income levels. Now, the question is whether we can afford to do it. I don't have that data. How much of for example, in my view, we cannot afford to get the FPIs very, worried about tax stability in India. We cannot afford whatever we might say because we still need stable flows, including FPI flows. What percentage of FPI is in short term, I'm unable to say. But if that is substantial, I don't think government will try and tinker with the short-term capital gains tax rate. That's my view.
Fair point, especially at a time when, there are external worries with geopolitical shifts. Perhaps this kind of an experiment will not be indulged in. Himanshu,
in fact,
I'll just get Himanshu's view.
Sorry. Sorry.
Himanshu, your view?
In my mind, if you look at the entire capital gains tax regime, that's become far too complex over the years. You have different rates of tax and different periods of holding of assets for classifying them as long-term or short-term vis-a-vis different types of assets, different categories of taxpayers. And therefore, clearly there's a need to revamp the current capital gains tax regime and make it more simpler. Lata, I would agree with you that as far as financial assets are concerned, I don't think there is any merit in touching them. The current tax regime, which is applicable for financial assets, especially listed securities, that should stay intact, but there's a need or room for simplifying the overall capital gains tax regime.
I think short-term equity may be raised to maybe 2 years or something. I hope the apple cart is not upset. I'm told I'm running out of time. So 2 quick things. Buyback tax to be shifted from companies to shareholders. Is that even something the government would attempt? I mean, so far they have not gone to the shareholder because it's simply difficult to administer. They would rather stick with corporates. What do you think, Mr. Kapadia?
Lata, I don't buy the argument that it is any longer difficult to administer. Don't forget, dividend tax at the corporate level was brought in with that philosophy that, it's very difficult to track individuals earning dividend income. But we did away with that, right, very recently, for all the reasons we know of digitization, 360-degree insight, which is now available. So buyback is there really in very, very few cases relatively. So I don't think that's an argument for not being able to do it. If government wants to do it, I think they can go ahead and do it.
Okay. Well, since we're out of time, your best expectation, Himanshu, your best expectation on tax front tomorrow?
My best expectation, I would expect that as far as corporates are concerned, their biggest pain point today in India is litigation. And I would expect the government to introduce some kind of a mediation scheme which will help corporates avoid tax litigation going forward. We've seen mediation being quite successful in several other parts of the world. And, that's something we should strongly consider.
Oh, excellent. Mr. Kapadia, same question to you. One big ask or expectation, not ask really, time for ask is over.
A relatively boring tax budget, Lata.
Okay. That would be best. I mean, it would mean stability, I guess, though I suppose that will disappoint those of us who are expecting that perhaps a little bit income tax. Thank you very much for joining us and giving us some reference point when the tax announcements come in tomorrow. Wrap up on Bazaar, Chartbusters.